Hey guys, welcome back at the channel. It's me, Adam. You're watching Unlimited Options Investing, and what a day in the market it was today. Very green on the top side of the heat map. You have big technology, Apple, Microsoft, Google, Amazon, and Tesla up big today. Even Nvidia and all the semiconductors, software, Salesforce, with the more quote-unquote industrial companies not doing as well. Energy sideways, industrials, households, healthcare, and even financials are break-even down today. And we can see the difference with the Dow Jones up 0.62%, whereas the Nasdaq today was up 2.17%. S&P 500 is somewhere in the middle, up 1.2%, with the IWM actually struggling today, down marginally, pretty much break even. So let's hop on over right to the candlesticks. So the dollar index did recover a little bit, but it did get pushed down. We do see the wick at the top of the candle. When you look at the VIX, the volatility of the S&P 500 index, which is a good measure for fear in the market, went down today pretty significantly, went down 19.71% today. So on Friday, we had a really big gap up, and then today on Monday, everyone's calmed down. And we see that whenever the VIX does spike, it is usually very acute, and then it falls right back down. And it looks like this may not be any exception. So we're going to be looking for retracement back to the moving averages, looking at the put-call ratio. So we're pretty much hovering in the middle, and we can see that with the fear and greed index, we're still in fear at 42. The thing is, as we'll see in a moment, we're actually near where we were on the indices just maybe a few days ago, maybe just a few sessions ago. Yet we aren't in as greedy territory as we were before, although right now we aren't as greedy as we were at the same time. And looking at equities, so looking at the FANG index, Facebook, Apple, Amazon, Netflix, and Google, no surprise this one was up today as they make up such a big part of the market. They were up 1.38%. So we opened up right where we closed off, and then we found strength throughout the day, bouncing right off at 20 EMA. The Dow Jones were still under the 50 EMA and the 20 EMA, so we're going to have to get through that. As well as this point over here, let's say the 354. We hit as resistance back in August of this year, so we have to get through that, which coincides with the 50 EMA and then the 20 EMA, and then we can recover back on top of this blue line. The S&P 500, so this is actually looking like a pretty big indecision candle, as we have a wick on top and below the body of the candle. So the rest of this week is really going to determine whether this is a bull trap or if we're going to continue this move and recover up higher to new all-time highs. And when we zoom out, we can see that the top of this channel still has room for it to run, especially into a December Santa Claus rally. However, for the Nasdaq, the QQQ, we're still at the top of the range. So what we want to see here for technology is us break above the previous all-time high and have something that looks like this. So we break the all-time high, we come back down for a healthy pullback, and then continue making new all-time highs. That would be awesome. But if we're unable to crack the all-time high from where we were before, wherever we find that selling pressure, we could see something looking like this and go toward the downside, or we could continue consolidating to the... I'm still eyeing this 50 EMA in this blue line, which is the resistance back from September, acting as a potential support. If not, our trusty ascending channel is another very strong area of interest for me when it comes to buying the dip on technology. And the IWM, so this one has been pretty disappointing. I had really high hopes for this one. RSI is still pretty low. We're at about 32, and the last few times the RSI has been this depressed, we have seen pretty big rebounds in the index. And I'm thinking it could be just a matter of time for these small cap companies. And for crypto, we see a really nice recovery right back to where we were before. However, we're pushing right against that 20 and that 50 EMA, and we're finding resistance at that point. So we either have to consolidate at these areas over here and then find buying pressure. But if we don't and we sell off, we're going to be probably testing these lows again around the $52,000 mark. But crypto, what an asset class today. We were up 6% in Bitcoin. And no different with Ethereum. This one is up 7.55%. But this one's actually looking a lot stronger than Bitcoin because it's above both the 20 and the 50 EMA. We keep finding sellers around this $4,500 mark. So we want to see some kind of consolidation over here and then go toward the upside, and then we can test those all-time highs again. Crypto really is spectacular. What an asset class. But again, if we're unable to do that, look for support at the 20 EMA, this 50, or this blue line over here around the 4,300 mark. Cardano also found buying pressure, having a low of $1.42, now trading at $1.61. And as long as crypto in general is able to hold the levels that it accumulated today, this looks like it could have been a short-term bottom for the moment. Gold not looking the greatest right now, just kind of trading all over the place. Silver slicing right through that trend line, and looks like this one could be heading lower back. It looks like it has the possibility to go and test that $22 mark again. And US oil also recovering today, but we do see a big wick, meaning a lot of sellers at the $72 mark. Alright, and that's the end of my video. Thank you very much for watching. If you're new, welcome aboard and hit that subscribe button. As always, smash that like button, and I will see you in tomorrow's video.